Hey traders, welcome to Charts and Coffee. Hope everyone is having a great morning. Caffeinate and dominate. We are kicking off the first day. I love the first day of a new quarter, the first day of the new month, turning the page, starting with a fresh, well, maybe not be a fresh book. We've actually got 4 trades carrying over from Q1, but I love the freshness of a new quarter. And if there were things that in Q1, you say, I could have done better, or I might have not been doing. This is a great time to just wait for the new year to have a resolution of a Q2 resolution. I'm going to work on position sizing. I'm going to work on stop losses. I'm going to work on relative performers. And so love Q1. Good quarter. Excited for Q2. So let's get to it. What do we have? Well, then we had a quirky event on Friday, on Good Friday, where we had the PCE release. Some of you might have caught the video that I did where I said, look, we can't look at futures. Market's closed. Can't look at stocks. Market's closed. But Forex is open. Forex is open every single trading day of the year except for 2, New Year's Day and Christmas Day. And so what we did is we looked at the Australian dollar, Japanese yen. We looked at the dollar yen. We looked at a number of things. I think we looked at the euro as well, I believe. And we said, hey, there are a group of participants, and it's actually the biggest group of traders on the planet. It's the biggest market on the planet, and that's the foreign exchange. And we look to see the way the currencies responded. Well, the currencies responded largely equities bullish. Yen was weak, dollar was weak, euro was strong, Aussie was strong. I think, heck, even the loonie, the Canadian dollar, might have been strong as well. And while we've given back, take a look at this daily time frame chart of the S&P. While we've given quite a bit of that back, let's see here. And I want to be on a 5-minute intraday chart. Let's make sure we're on that 5-minute. There we go. If you take a look at this 5-minute intraday chart, yeah, we've given some back, but we are trading above the previous session close, which, for me, who knows what. Let's go back to ES. Who knows what the day is going to bring? But I know as we begin, the previous session close is 53.04 and a quarter. So I'm actually going to just move that down there, 53.04 and a quarter. As long as we're above that, we're at least even minorly in the bullish hemisphere. Let's do the same thing with the NAS. NAS has had an interesting road to hoe. When you think about the path of the Magnificent Seven, the not so magnificent, quite frankly, when you think about the path of semiconductors, which is pretty much being carried on the single cylinder of SMH, when you think about XLK, the technology sector, which is absolutely being hammered by Apple, you don't really have a lot of help from Microsoft. And so we have a not so magnificent group, and that group is largely responsible for any time the NASDAQ is outperforming. It's going to be due to those 7 stocks. So there's your NAS. At least we're above it. Again, I'll just operate with being in the bullish hemisphere. The Dow is an index that we don't talk about a lot. Generally, I say we, the trading public. It's not something that gets talked about, in my mind, especially lately, enough, because the Dow has a lot of pretty great sectors within it. Most especially the 2 that come to mind are XLE and XLI. And if you're not paying attention to these, let me just recommend, put them on your watch list. At least keep an eye on something that isn't tech, that the obsession with tech, the obsession with certain stocks, it is hurting us, because by focusing on one thing, there's an attention, right? Attention. I remember one of my first motorcycle schools was based on a book called A Twist of the Wrist by Keith Code. And Keith Code would explain when you're riding a motorcycle, this is a racing school, that your attention is a dollar bill. So it basically means you've got 4 quarters, 10 dimes, 20 nickels, 100 pennies, however you want to look at it, to spend on each element of getting around the racetrack as quickly as possible without laying it down. And he says, if you're still learning how to ride a motorcycle and you're using a lot of pennies, quarters, nickels, just shifting, right? Just flipping the throttle to downshift, things like that, that's less time you have to observe where on the track you need to be upshifting, downshifting, braking, turning. And I think for a lot of traders, when we're struggling with Think or Swim, or we're struggling with Tasty or putting in an order. I'm not picking those two brokers out. They're actually two of the most popular. When we're struggling with our technology, that's that much less attention we have to actually put the trade on. So be kind to yourselves, be a little fair to yourselves, and also realize that the more we get those basics down, or simplify and automate the basics, right? Everything on my chart's automated. So that learning curve is very shallow. It's very quick. It's a little speed bump, right? That's it. So the more we can do that, the better off we are. And take a look at XLI. This is a great example of being able to automate so much and say, hey, wait a minute, this thing is a relative outperformer. Same with XLE. And absolutely keep an eye on that. All right, so let's get into it. As always, gang, best part of our show is your questions. And so let's get into, oh gosh, I totally forgot. So day after tomorrow, we have a webinar. So if you're thinking to yourself, Rog, okay, we get that Q1 was good. Is this something that's going to keep happening? Is this something we can do a year from now, 10 years from now? What are you doing? And what's so different? Glad you asked. A lot is different. A lot has been next gen and evolved. And this Wednesday, we're going to talk about what I'm doing, what tools I'm using to find the trades that I'm finding and the trades that we're finding. And we're going to go through that process on Wednesday at 8 p.m. Eastern, New York time. We're going to get together and talk about what worked in Q1 and what is, frankly, continuing to work as I look at my charts in Q2. And if you're finding yourself not growing an account right now, you definitely got to be there, because Q1 was a absolute needle mover for account growth. So if you're thinking to yourself, yeah, Rod, Q1 wasn't great, come check out what we're doing and you can put that stuff to work. All right. Very stoked about that. All right. Next up is index sector stock alignment on a 5-minute chart as well. Yes, Mr. Walker, every time frame, we want that index sector stock alignment. We want to know that the heavily weighted stocks, the heavily weighted sectors are moving with the index that they belong to. And it's absolutely a big part of the follow through that we've enjoyed in Q1, rather than trying to find a one-off stock, trying to find the stock of the day, trying to find some trend. There's a number of stocks I get asked about all the time. And it might be because it's on television or just is the new trendy thing. We don't do trendy, right? We don't do that. We want to find classic. So classic is index sector stock. All right. The dollar has been rising recently. Well, what time frame, Ken? Daily, dollar's been rising recently. Is there a truth to the higher dollar, lower equities? Oh, great question, Ken. So, yes. If we look back, so to your point, if we look back to the chop that we're in, interesting perspective on a daily would be, for me, we're in a non-trending environment, right? This is chop. We have a lower end of the chop. We have an upper end of the chop. Back and forth we go. However, you're absolutely spot on, Ken. We got to the upper end of the chop in the mid part of March, and we spent the rest of the March going down to the lower end of the chop. So for me, it's just kind of really not going anywhere new, right? New highs, new lows mean that there's a new reason. There's a new, and that's causing us to react in a way that's causing us to move to price levels we may not have before. That's what breakouts are, right? Or even breakdowns. So yes, we're moving lower within the range. So the question is there a truth to higher dollar, lower equities? All right, Ken, I love the question. Thank you for asking. There is little to no correlation between the dollar moving up and equities moving down. And I don't know why these things get repeated. They do. There are a lot of things that get repeated, and I'm actually going to give you a number right now. So if you want to look at the S&P, it is generally a negative correlation, by the way. It's probably a little bit more negatively correlated with the S&P and the NAS. There's very little correlation with the Dow. But no, as you've observed, Ken, I love what you just did. You said, you know what? I hear people saying something, but when I go to the chart, it isn't there. The advice sometimes that's out there is so bad, I just have to call it what it is. It's gaslighting practically. You should be thinking this way, right? You should be thinking the Russell is leading everything. You should be realizing the dollar is yeah, thank you for asking, Ken. It is not true. The dollar moves based on monetary policy. The equities move based on monetary policy, and that's what they should generally be moving on. Now, the hesitancy we have still from the Federal Reserve to commit in a really clear way to when they're going to start to cut is a big reason why the dollar is just able to go back and forth and back and forth, arguably within a range. But if we step back and look at, what it's doing, it's hard to say that this is a really clear trend. But generally speaking, I would be a little bit more expectant, trading in expectancy of a lower dollar. Not that that matters to anything else other than currencies that either trade against the dollar, or, there are some stocks that are a little bit more US dollar sensitive, but as a general rule, no. This idea that dollar up, equities down, yeah, you've noticed it just isn't true. And yet people persist on repeating it. I guess because they don't have anything else to say. Thank you for asking, Ken. I love the question. Thank you for being willing to question the dogma. That is such an important thing to becoming a really good trader. So I appreciate that very much. All right, next up, Toll is a boring stock. Yeah, we like boring. World's most boring trader here. We love boring, but what we don't love necessarily is illiquidity. So Panther, I'm with you. Gorgeous, ITB, XHB, overall uptrend. It's got the alignment. The problem is if you go out to April 19 and you start looking at calls, like I said, love boring, don't like illiquid. And that's where the wheels fall off the wagon with Toll. There just simply isn't any, what I would consider to be reasonable liquidity. What's reasonable liquidity? My gosh, there should be at least 500 open interest, just 500 contracts trading in that stock or that ETF. And so I don't even have that. Some of these are single digit open interest. Crazy. In a stock like this, yeah, just disappointing, but it is what it is, right? But you can do, Panthers, and I'm sure you have. Look a little bit more broadly in that group. Find what does have liquidity. Anthony says, I just finished the book, What I Learned Losing $1 Million. Awesome book, one of my favorites. Do I have any more book recommendations? Anthony, you know what I'll tell you to do? Read it again. Read it. Don't even put it down. Read it again. That's one of those books that if you just reread 2 and 3 times, it just something else is going to sink in. Something else is going to sink in. You're going to notice a little bit of a nuance. I would say just read it again. And then after that, sorry, I'm looking at my bookshelf here. Good question. I would say if you're looking for another really good trading book, it's not a trading book, but I would recommend to everybody Morgan Housel's Psychology of Money. Psychology of Money, not a trading book, but something that I think will help with anything we do with money, anything that we do with money, which is trading. I used to joke when I was writing a lot of books on the topic of Forex, said I trade money for money, right? So I'm a big fan of that book. Yeah, that's a good one. The Psychology of Money. I would definitely recommend that one. Yep, The Psychology of Money. All right, what's my opinion? Hey there, Eddie, of CVX. CVX is the number 2 weighted stock in XLE. It doesn't have the trend, though. So to look at CVX, we really should do this. All right. This is the top 11 names in the XLE ETF. And actually, my Sector Secrets Mastery folks, we spent a good bit of time in the top tier Outlook, which comes with your Mastery subscription. You can go check that out. Today, I spent quite a bit of time about the overlap between XLE, OIH, XOP. But even before we get to that overlap, Eddie, CVX of all the stocks in XLE is actually the one I would not focus on. Is it going to go up? Yeah, probably. So Eddie, I'm not saying short it. All I'm saying is if I look at these 11 names, only one does not have a trend. And that one is CVX. Exxon, gorgeous. XLE, gorgeous. COP, gorgeous. Schlumberger overlaps the oil services, the OIH ETF, gorgeous. So it will move higher, very, very likely, but why not pick the best of the best? why not grab the one that, or the ones that have the liquidity and are already in uptrends, suggesting that when we pull back to a daily price movement range, when we have a 34 bar mean reversion, that we're likely to continue because that psychology is so overwhelmingly bullish. So it's likely going to rise with the tide, but it's actually funny enough, the only one that isn't trending. All right. Okay. Next up is, oh, Anthony, you took advantage of the pre-sale. Awesome. Awesome. That's ending the 2nd, April 2. So yes, awesome. All right. Gabriel's asking, what's my take on the PCE data? Largely bullish, Gabriel, but you can check out the replay. And we were talking about that earlier too. You can check out the replay over at the Simpler Trading YouTube channel, and you can see my live coverage and the way we live analyzed PCE as it happened last Friday. And you'll probably find that, I'm guessing, the most helpful, because that way you could see exactly what I was interpreting as it was happening without, the advantage of hindsight. Do I look at Greeks when selecting options? Not at all. JP, thank you for the question. No. Remember, Greeks are just taking price and momentum and even the time to expiration, and they're just doing a different mathematical sequence around it. I don't use Greeks. I have not found them to be necessary when I go through the process that I do every day, which is relative outperformance. Ultimately, what we want to do is focus on not just relative outperformance, but focus also on, in terms of time to a certain event, because that's going to be factored into Greeks. I can just look at a calendar and sort that out, sort time to a certain event. It could be FOMC, it could be earnings, it could be, an event could be the end of the option, expiration, right? So there's a lot of things we can look at without getting fancy with an interpretation of something that we can look at directly, right? You know what Greeks remind me of? Greeks remind me of those folks who go to a concert. And I get it. Sometimes you're in the nosebleeds and you have to, but they go to a concert and they watch the big screen the whole time. Or you go to a sporting event and you watch the big screen the whole time. Watch the thing itself, right? And to me, Greeks are removed, and they're not anything. I'm not going to say they're not helpful. They're just not helpful to me. Never needed them. So no, I do not use them at all, ever. Yes, Frank. Annie Dukes quit. Yeah, absolutely, my friend. Atomic Habits. Big fan. In fact, I use the Atomic Habits quote. You don't, it's the quote about goals and systems, that you fall to the level of your systems. In other words, we all have goals. Is anyone in this room right now not want to make money in the market? We all have the same goals. So if goals were all we needed, then we would all be fine, right? We know what we want. We want to grow our account. I mean, at the end of the day, that's what we want. When people say I want to make money, have winning trades, at the end of the day, what is really what we want? We want to grow our accounts. Okay. So we all have the same goal, but how come then we're not all succeeding? Because we fall to the level of our system. And I love Atomic Habits. And in a lot of ways, a lot of what we do in the Sector Secrets Mastery tracks right back to falling to the level of my systems. I'm going to fall, if you will, to the level of the accuracy of my daily price movement ranges, to the validity, the veracity of my 34 bar EMA, to the simplicity and hopefully the accuracy, right, of whatever's on my screen. So it's really important to be extremely discerning about what you put on that chart. That is the system. That is the level that you're going to fall to. Now, right now, I'm really pleased with what they're doing, right? If I'm going to look back and say, what is the output? What is this yielding? What is the system doing? We're going to talk about that on Wednesday. So if you haven't already registered, I should give you all the link. That would be really helpful, wouldn't it? There we go. So top tier pro system.com, toptierprosystem.com. This Wednesday, we have a date, 8 p.m. Eastern, New York time. We're going to talk about the system, right? We're going to talk about the system because we fall to the level of our system. Yeah, that's a great, great book. Thank you for reminding me of that one, because that really does, Eddie, that does in so many ways, I think, apply to traders. No doubt. No doubt. All right. So just like that, I'm out of time. As always, gang, thank you so much for being a part of the Caffeinate and Dominate group. George, let Raghee fertilize your greens and grow your account. I love the account growth, and we're going all agriculture with it. I like it. I like it. All right, gang. Be good to each other. I'll talk with you soon, and I'll see you Wednesday night.